2 months ago, SpaceX went public in the largest IPO in history. 6 weeks later, the stock had lost almost half its value. And this week, without a single new rocket launch, without a single new Starlink satellite, without Elon Musk saying one word about it, the stock ripped back more than 20% in 2 trading days and closed back in on the exact price it started at. That's not a coincidence, and it's not hype. It's the result of 3 very specific things colliding at once: a lockup expiration everyone was afraid of, an earnings report that beat expectations, and a fight between 2 groups of investors who fundamentally disagree on what this company is even worth. One side has it valued near $115 a share. The other side has it near $800. Same company, same numbers, wildly different conclusions. By the end of this video, you'll understand exactly why that gap exists, what actually happened this week, and what to watch for next without me promising you a number. Because anyone who promises you a number on a stock this new and this volatile is guessing, not analyzing. Before we get into it, hit like. If you want more breakdowns like this, subscribe if you're trying to actually understand what moves these stocks instead of just reacting to headlines. And drop a comment telling me, are you holding SPCX right now? Watching from the sidelines, or did you already sell? I want to see how split this comment section is, because I have a feeling it's going to be close to 50-50. Let's get everyone on the same page first, because a lot of the coverage this week skipped the last 2 months entirely and just showed you a green candle. SpaceX became a public company on June 12th, 2026. It priced its IPO at $135 a share, raised roughly $75 billion, and opened trading at a valuation approaching $1.8 trillion. The biggest IPO in Wall Street history, full stop. The first day alone, shares jumped, and the company briefly passed both Amazon and Microsoft in market cap. Then it kept climbing. By June 16th, the stock hit an intraday high of $225.64. If you'd bought at the IPO price and sold at that peak, you'd have made close to 70% in 4 days. And then it fell apart. Over the following weeks, the stock gave almost all of that gain back, sliding well below the $135 IPO price, and eventually bottoming out around $108. For anyone who bought during that euphoric first week, that's not a paper loss you shrug off. That's a real gut check. So here's the setup heading into this month. A stock that IPO'd at $135, spiked to $225, crashed to $108, and had 2 major events sitting right in front of it. The expiration of the lockup period that restricts early insiders from selling, and the company's first ever earnings report as a public company. Both of those landed within days of each other. That's the collision I mentioned at the top. Now, here's the part most coverage got backwards. Almost everyone expected the lockup expiration to be the bad news. It turned out to be the opposite, and understanding why tells you something important about how this stock actually trades. A lockup period is simple in concept. When a company IPOs, early investors and employees are usually barred from selling their shares for a set window, often 90 to 180 days, specifically to prevent a flood of insider selling from crushing the stock right out of the gate. When that lockup lifts, all those shares are suddenly free to trade. And analysts typically brace for a wave of selling as insiders take profits. That's exactly what analysts warned about heading into this SpaceX lockup expiration. And by some estimates, the shares becoming eligible to sell represented well over $100 billion worth of stock, a genuinely enormous overhang sitting above the market. The lockup lifted. The wave of selling didn't come. Instead, the stock climbed roughly 3% on the day the restrictions ended, and options traders, the people putting real money on directional bets, started positioning as if the bottom was already in. Why does that matter more than the number itself? Because when a stock absorbs bad news that everyone was braced for and doesn't fall, that tells you something about who's actually still holding the shares. If insiders, who are now legally free to sell, are choosing not to, that's either a signal of genuine conviction, or at minimum, it removes a major source of anticipated selling pressure from the table. Either way, the market read it as a green light, not a red flag. But a lockup surviving is only half the story. The other half is what happened 3 days later, and it's the part that actually explains the size of this move. Last week, SpaceX reported its first quarterly earnings as a public company. Revenue came in at $7.81 billion for the quarter, ahead of the roughly $6.93 billion analysts had modeled. That's not a marginal beat, that's close to a 13% surprise to the upside on a company's very first report card in front of public shareholders, with an entire investor base still trying to figure out how to value it. To understand why that number matters so much, you have to understand what's actually inside SpaceX now, because this isn't just a rocket company anymore. The business is split into 3 segments. There's Space the Falcon 9 and Falcon Heavy launches, plus Starship development, which remains the most launched and most cost-efficient orbital operation on the planet. There's Connectivity Starlink, the satellite internet business, which is the company's most consistently profitable division. And then there's AI, added in February when SpaceX completed its acquisition of xAI, folding in the Grok models, the X platform, and a rapidly expanding AI computing infrastructure build-out. That third segment is exactly why this stock trades less like a rocket company and more like an AI infrastructure bet with a space program attached. And it's also exactly why the 2 days after earnings saw the stock rally about 23% combined, adding north of $300 billion in market value in roughly 48 hours. When a beat like that lands on a stock still searching for its footing after a violent drop, it doesn't just relieve pressure, it gives momentum traders and long-term believers the same reason to buy at the same moment. So, if the story were this simple, lockup survived, earnings beat, stock ripping back to the IPO price, there wouldn't be much left to explain. But here's where it gets genuinely contested, because not everyone on Wall Street agrees this rally deserves to continue. Start with where the money is actually flowing. Cathie Wood's Ark Invest has been adding to its SpaceX position, with recent buying in the tens of millions of dollars. That's notable because Ark's entire investment thesis is built around long-duration, high-conviction bets on transformative technology. They're not day trading this. On the analyst side, the picture is bullish but wide open. The average 12-month price target across Wall Street sits around $231, well above where the stock trades today. Citi has reiterated the stock as a buy, holding their price targets steady while noting their long-term valuation framework points toward $900 or higher once major Starship milestones are hit. Morgan Stanley has a $300 target built around the AI and connectivity segments, scaling faster than the market currently expects. There's also a short seller dynamic worth understanding because it tends to accelerate moves like this one. Heading into earnings, short interest in SpaceX bets that the stock would fall had actually surpassed the short interest in Tesla, another Musk-run company that's historically been one of the most shorted stocks in the market. When a heavily shorted stock beats earnings and rallies hard, some of those short positions get forced to buy back shares to limit their losses, which adds fuel to the rally on top of the genuine buying. That's not a conspiracy or manipulation. It's simply how leveraged bets unwind when they go wrong. Now, if you only watched the bullish half of this story, you'd think this is a straightforward buy the dip situation. It isn't. There's a genuinely serious bear case sitting right underneath all of this, and ignoring it is how people get hurt. Start with the most basic number. SpaceX is not profitable. Trailing 12-month earnings per share sit at negative $2.27. This is a company burning significant cash capital expenditures north of $18 billion to fund rocket development, Starlink satellite production, and AI infrastructure build-out simultaneously. That's 3 extremely capital-intensive businesses being funded at once. And none of them are cheap to scale. Not every analyst is on board with the bull case either. CFRA initiated coverage right after the IPO with a sell rating and a price target of $115, nearly 30% below where the stock traded on its very first day of gains. And a target that notably is close to where the stock actually bottomed a few weeks later. Morningstar's take is more measured, but points at the same underlying concern. the valuation implies investors will need to wait years, potentially decades, for actual earnings to catch up to the price being paid today. That's not a prediction of collapse. It's a statement that you're paying up front for a future that still has to be built. And the lockup story isn't fully finished either. While this first tranche of insider shares cleared the market without a sell-off, reporting around the lockup pointed to further waves of shares collectively worth well over $100 billion that could become eligible to sell in stages ahead. A calm reaction to the first unlock doesn't guarantee a calm reaction to the next one. Put simply, you have a company with real, beatable revenue growth and a genuinely differentiated position in space, satellites, and now AI, sitting inside a valuation that already assumes a lot of that future success happens on schedule. Those two things can both be true at once, and that's exactly why the price targets on this stock range from $62 on the low end to $800 on the high end. That is an unusually wide spread, even for a young public company, and it tells you the market itself hasn't agreed on what this thing is yet. So where does that actually leave you watching this a few days after the rally happened? The honest framing is this. SpaceX cleared two hurdles this week, an expiring lockup and a first earnings report that had real potential to send the stock lower. And instead, it used both as launching points to climb back toward its IPO price. That's a genuinely bullish short-term signal. It is not on its own proof that the long-term valuation debate is settled, because that debate was never really about this week's news. It's about whether Starlink, Falcon, Starship, and the newly folded-in AI business can eventually generate profits anywhere close to what a $1.7 plus trillion valuation assumes. What's actually worth watching from here isn't the daily price move. It's the next few data points that will tell you which side of that debate is winning. Watch the next lockup tranche and whether it behaves like this one did. Watch capital expenditure trends, because a company burning this much cash needs revenue growth to keep outpacing spending, not just beat a single quarter. And watch how the AI segment specifically performs, because that's the piece of this business that didn't exist a year ago and is arguably the reason the valuation is where it is at all. None of this is a prediction, and I'm not a financial advisor. This is a breakdown of what happened and why, not a signal to buy or sell anything. A stock that's moved from $135 to $225 to $108 to back near $135, all inside 2 months, is a stock that rewards people who understand the mechanics and punishes people who are just reacting to the last headline they saw. So here's what I actually want to know from you. After everything we just walked through, the lockup, the earnings beat, the bull case, the bear case, where do you land? Are you more convinced this rally has legs, or more convinced this is a dead cat bounce inside a longer valuation reset? Put your answer in the comments. And if this actually helped you understand the mechanics behind the headline instead of just repeating it, subscribe, because the next lockup wave and the next earnings report are both going to matter just as much as this week did. And I'll be breaking those down here too.